back discussing the 6 tips for home buyers. There's going to be a lot of videos that I put together for you guys that are going to be very similar. We might look at other tips or other important factors of buying a home and put some of those things out. This is, like we say, the purpose of our YouTube videos is to provide credit education to our clients and help them better understand the credit repair process and to be better educated. So we're doing our 4th tip here. This one is, I call it checking for problems or delinquencies on your credit report. And as it says here, typically creditors report any changes made to your account information monthly, right? And this means that some accounts listed below may not affect the most recent activity until the creditor's next reporting. This information may include things such as balances, payment dates, remarks, ratings, etc. The keys, is that word there is covered, are provided to help you understand some of the account information that's being reported. Now you can see this key right here that they have. NR meaning not reported, okay, unknown for X, okay is current, and these are the late pay statuses all the way up to 120 days, collection, voluntary repo, regular repo, charge off, and foreclosure. Now most of the time you'll be able to tell when you see these on your credit report by other comments. Alright, some creditors report timelines on your credit payments each month in relation to your agreement with them. The ratings in the key below describe the payments that may be reported by your creditors, and please note that some but not all of these ratings may be present on your credit report. So every payment you make is very important, so you make sure your credit report shows that you've made each one on time. Consistency is key when you're applying for a loan. Alright, 1 or 2 late payments from several years ago isn't likely to stop you from getting a loan, but you need to have at least 12 months of perfect pay history is what I tell you guys, particularly on your previous mortgage or on your credit report overall to qualify for a loan. Now what they're looking for is that your major accounts like your cards, any personal loans, credit cards are not late, because you're telling the bank that you're struggling right now, so they are not going to want to loan you money until you can show a consistent period of time where you've been on time with your bills and you haven't had any issues. So make sure that you are not allowing anything to be late on your. If you see a late payment report that you know is incorrect, you need to contact your creditor and provide evidence that you made the payment on time. This is the only way you're going to change a late payment, people. Okay? You're going to need proof that you can produce, or you're going to need your creditor to admit that they made a mistake in writing. Verbal agreements and verbal communication is not going to do you any good. You're going to have to get that in writing. It can take months to correct an error. So that's why it's so important to look at your report early in the process of applying for a home loan. If the late payment is accurate, then you'll need to explain what happened and why. So some lenders will give you 1 late payment. Some mortgage companies will give you 1 late payment. Some lenders, okay? They'll give you 1 in the last 12 months, but you'll need to have an explanation for that. Alright, and you can report errors directly to each credit bureau online and contact your creditors as well. If you're working with us, we'll help you a great deal with this problem. So you would bring that to me and we'll take a look and see what we need to do to get it done. Alright, that's the end of the 4th tip, which is to check for problems or delinquencies on your report. Make sure they're accurate. Make sure everything in your report is accurate, and if it's not, you want to take all the steps necessary to correct it.